Welcome to Uncovering Trusts, a podcast by the Edison Group, the content-led IR business integrating analyst content, digital targeting, and investor engagement. Tune in to find interesting investment ideas and stay on top of what's happening in the investment company sector. I'm your host, Will Manuel, and today I'm joined by Milosz Papst, Director of Investment Trust Content at the Edison Group, who will talk about IP Group, whose ticker is IPO. Milosz, thanks for joining us today.
Hi, Will. Thanks for having me.
Okay, so let's get into it. You recently published a research note where you discuss a kind of roadmap to value for the company, for IP Group. Can you talk about this, please?
Yes, with pleasure. IP Group invests in unlisted technology businesses across life sciences, deeptech, and cleantech. It is mostly active in the UK with an international footprint through investment platforms in Australia, New Zealand, and the US. The company made good progress in crystallizing its portfolio values through exits last year with proceeds of around £183 million, most notably from the realizations of Featurespace, which is an AI-powered fraud and financial crime detection business sold to Visa, and Edison Technology, a provider of a remote web browser and related hardware, which was sold to Everfox. Importantly, all exits were performed at or above previous carrying values. However, its performance continued to be negatively affected by the demanding environment for early-stage businesses, as well as some company-specific setbacks, markdowns of selected holdings due to a more demanding funding environment, and a derating of the share price of the listed Oxford Nanopore. This was only partly offset by the strong valuation uplift from the above-mentioned Featurespace. I guess that investors may find the 15% NAV total return loss in 2024 and the lack of historical NAV growth disappointing. But I believe that there are a few reasons why it is still worth having a closer look at the company. Firstly, its shares trade at a wide discount to last reported NAV, around 56% at the time of recording this episode. Secondly, the company held a sizable net cash of £156.5 million at the end of last year, together with a sizable stake in the listed Oxford Nanopore of around £100 million based on the end 2024 share price. So if we account for these two items at par, then the current market price implies a 76% discount to the company's private portfolio values at the end of 2024. And thirdly, its portfolio includes a number of companies with good business traction and interest from potential buyers. Therefore, I thought it would be instructive for investors to outline a value creation roadmap covering important milestones across IP Group's portfolio, as their materialization would indicate positive momentum.
Okay, yes, indeed. So thanks for that. I believe that the first item you discuss in your note is the delivery of milestones across key holdings. Can you elaborate?
Yes, that's right. IP Group's management highlighted that there are more than 35 commercial and technical milestones across its portfolio this year, including funding rounds, clinical trial results, product launches, and technical milestones. I think that investors should closely track the progress of IP Group's major holdings towards commercialization, especially given last year's sale of its major revenue stage businesses, that is Featurespace and Edison Technology I've just mentioned. Let's maybe start with Oxford Nanopore, which was IP Group's largest holding at the end of 2024. IP Group was the company's founding shareholder in 2005, and the company successfully completed its IPO in 2021, allowing IP Group to partially realize its investments, which together with a minor partial realization in 2020 brought IP Group's total proceeds so far to slightly over £100 million, already more than its total investment. Now, the company offers a new generation of nanopore-based sensing technology, enabling the real-time, high-performance, accessible, and scalable analysis, so sequencing of DNA and RNA in patients and pathogens. I really encourage our listeners to look up their portable real-time device on the internet to get a flavor of this interesting technology. Now, the company seeks to further scale its business via significant growth in its revenue, coupled with realizing economies of scale to expand its gross margin and reach EBITDA and cash flow break-even points by FY27 and FY28, respectively, which is a target that the company's management recently reiterated. it seeks to deliver a growth rate of more than 30% in underlying revenue between 2024 and 2027, which should be underpinned by the gradual diversification away from the core research market, which faced headwinds from weaker demand in China due to US semiconductor export restrictions, into industrial, clinical, and biopharma markets. I would also note the gross margin improvement in FY24 as the company's management saw the first signs of positive operating leverage in the second half of the year. The positive outlook for the business seems to be shared by high-profile investors that recently joined the company's shareholder register, Novo Holdings, and Larry Ellison, a tech investor who co-founded Oracle. I would also note the recent expiry of a veto option against acquisitions attached to the shares held by the CEO and co-founder of the company. Now, when it comes to the risk around US tariffs, I would note that Oxford Nanopods manufacturing is primarily UK-based, while around 34% of its last year's revenue was derived from the Americas. So this means that the company is exposed to the potential impact of US tariffs, although it may at least partly mitigate this by its pricing power arising from its differentiated technology.
Okay, thanks for that. So I believe Istesso, I think that's how you pronounce it, another large life sciences holding of IP Group, recently reported clinical trial results for one of its drugs.
Yes, I have covered it in detail in an update note published in February. The company announced the results of its phase 2b clinical trial of loramistat in rheumatoid arthritis. The drug demonstrated a statistically significant reduction in bone erosion, which was the key secondary endpoint, as well as improvements in disability and fatigue. So Istesso plans to evaluate the drug's potential to promote adaptive tissue repair in rheumatoid arthritis in combination with existing disease-modifying anti-rheumatoid drugs, as well as for other chronic diseases. It highlighted that it is sufficiently funded to conduct these studies. That said, the study failed to meet its primary endpoint of improvements in ACR20 response versus placebo, which resulted in a roughly 32 million pounds markdown to around 92 million of IP Group's carrying value. The company will report the full trial results in due course, which may help assess the future development and marketing potential of the drug.
Okay, thanks. Interesting. And can you touch on IP Group's other life science investments?
Yes, so IP Group holds a further 28 life sciences investments, whose carrying value at the end of last year represented roughly 31% of its total portfolio. The largest holding, around 4% of the total portfolio, is Hinge Health, which is a US-based provider of digital physical therapy services. The company generates substantial revenue, which increased by 33% to $390 million in 2024, at a gross margin of 77%, which allowed it to significantly narrow its net loss to just $12 million from more than $100 million in 2023. And then there are at least 8 holdings which expect clinical data readouts in 2025 and 2026. So here I would note that development stage life sciences holdings have the potential to be significantly revalued upon successful trial results and or a takeover bid. For instance, within IP Group's portfolio, the private Kainos Therapeutics acquired by Dr. Falk Pharma following positive phase 1 results, and the listed Abliva, bought by Farming Technology after positive trial results, were revalued by 100% and nearly 300% respectively compared to their end 2023 carrying value. However, given the small size of many of these holdings, several such events will be needed across IP Group's portfolio to drive a meaningful impact on its NAV performance. Just for illustrative purposes, out of IP Group's 7 holdings that had clinical trial readouts last year, 4 reported positive results, 1 mixed, this was the Istesso I've just talked about, and 2 negative.
Okay, thanks. That's useful overview of the life science portfolio. Can we now move on to their cleantech holdings? Can you talk about that, please?
Yes, I believe that among the cleantech holdings, there is good development momentum for Hysata, which is a developer of a novel capillary fat electrolyzer, which is a device that uses electricity to split water into hydrogen and oxygen, so crucial to the production of hydrogen fuel. This holding made up 9% of IP Group's end 2024 portfolio value. IP Group's management highlighted that the company remains on course to demonstrate a 100 kilowatt hydrogen system this year, which would represent an important validation point that its technology is commercially scalable. It is, of course, aiming for much larger gigawatt scale manufacturing. I think the company is likely well funded following its oversubscribed Series B round of more than $100 million completed in May last year. And I think the business's potential is illustrated by the fact that its technology exhibits a 95% system efficiency compared to 75% for the best incumbent solutions. Now, IP Group's management also highlighted that Hysata is addressing the green hydrogen market, which should be worth around 17 billion pounds by 2030 across zero carbon production of steel, fertilizers, and methanol, as well as in shipping, which together make up around 12% of global carbon emissions and where there are no practical alternatives to green hydrogen.
Right. Well, that's something to keep an eye out for. And can you tell our listeners more about their nuclear fusion business?
Yes, sure. First Light Fusion, which is the company you are referring to, is a developer of nuclear fusion technology based on inertial confinement. It achieved a major technical milestone in February 2024 as it became the first fusion company to successfully fire a shot on the Z machine of Sandia National Laboratories, largest pulse power machine globally, breaking the machine's pressure record. And while achieving higher pressures is critical in fusion energy development. IP Group highlighted that this also validates the company's ability to work with third-party facilities, potentially opening the door for a more capital-light business strategy based on its amplifier technologies for inertial confinement fusion schemes. The company shifted to a capital-light model as a specialist component supplier, and IP Group expects it to secure first revenues imminently. But you should still view it as a kind of a long-duration play, given that the commercial viability of nuclear fusion remains to be proved. In terms of other cleantech holdings, I would highlight Oxa Autonomy, a B2B-focused developer of universal autonomous software for basically any type of vehicle. The company continues to advance its technology, including through NVIDIA's AI-powered Cosmos World Foundation models, and entered several partnerships, for instance, with DHL Supply Chain at Heathrow Airport. But it is yet to generate meaningful revenue. So the company's progress in signing major contracts and producing revenue remains key to unlock its value.
Okay, thanks. So if we can move on to IP Group's deeptech holdings.
Of course. So after the sale of Featurespace and Garrison Technology, the company's deeptech portfolio consisted of 27 smaller holdings across themes such as applied AI, next generation networks, human machine interface, and future compute, including quantum computing. Ultraleap, IP Group's third largest holding at the end of 2023, was significantly written down with the company undergoing restructuring and headcount reduction triggered by, changing dynamics and slower customer adoption in the extended reality sector. That said, IP Group highlighted that the company recently announced a partnership to exploit the value of its foundational patents that, if successful, has the potential to yield substantial future value for IP Group. Moreover, IP Group highlighted that it sees strong interest in businesses developing faster, more efficient computing hardware for AI, including IP Group's portfolio companies, Intrinsic Semiconductor Technologies and Lumai.
Okay, that's helpful. You mentioned at the beginning that IP Group generated healthy realization proceeds last year. What's the outlook for further realizations?
Yeah, so IP Group's management sees a promising realization pipeline and aims to deliver more than £250 million in realization proceeds from its private portfolio in 2025-2027, including roughly 50 million this year. This is roughly 30% of its end 2024 portfolio value, so a quite significant chunk. What's interesting to note is that management highlighted that the achievement of this exit level is not dependent on a significant pickup in availability of capital for early stage businesses. Although I would note that, of course, the macro uncertainty triggered by US tariffs may affect VCD volumes and in turn IP Group's transactional activity. I think that IP Group's recent exits are a strong achievement given the still demanding venture capital deal environment.
Yeah, I agree. I think it's a fair point. And so what's the next item on your roadmap to value for IP Group?
Yes, so as we all know, the pricing environment for early stage businesses deteriorated after 2021. So if you look at a VC portfolio, it's important to understand what was the last time portfolio companies raised capital. Those which haven't raised capital since 2021 and are not profitable yet will soon have to return to market for fresh funding, and their last funding rounds may be considered stale. Um, so the last funding round valuations, I mean. IP Group mitigates the issue of outdated valuations by adjusting the valuations of the last funding rounds for some of its assets, with 18% of portfolio value at the end of 2024 reflecting a downward adjustment and 4% incorporating an upward adjustment. 6% of the portfolio value is based on a funding round that was completed in the last 12 months. There were 19 funding rounds closed across IP Group's portfolio in 2024, 10 of which were up rounds, 3 were flat rounds, and 6 were down rounds. And only 7% of its portfolio reflects an unadjusted valuation of a funding round closed more than 12 months ago. Now, its other holdings are valued using other methods than last funding round valuation, for instance, a discounted cash flow model or valuation based on future market or commercial events.
Right. Okay. But, as we all know, cash is king. So maybe you can tell our listeners more about the cash runway IP Group portfolio companies have at the moment.
Yes, of course, that's a fair point. So around 18% of IP Group's end 2024 portfolio of investments above kind of 4 million threshold needs to raise funding in 2025, according to IP Group's management. This includes First Light Fusion, which has failed so far to complete its Series D round and therefore is pursuing alternative funding options, as the funding available for nuclear fusion projects in the market has not returned to 2021 levels. IP Group's management said that around 32% of portfolio holdings are funded to expected profitability, including Oxford Nanopore, and a further 45% and 5% are funded until 2026 and 2027, respectively. Here I would note that Hinge Health filed for an IPO on the New York Stock Exchange in March this year. That said, the recent market turmoil triggered by Trump's announcements of new tariffs will likely put a pause on IPO processes, at least in the short term.
Yeah, I think that's probably right. So I was just wondering how IP Group plans to allocate its significant realization proceeds.
IP Group remained disciplined in terms of investments last year, and its recent focus has been on supporting key existing holdings. But the company also puts emphasis on shareholder returns, and given the wide discount to NAV, which is above the 20% threshold defined by the management for pursuing buybacks, this is the form of returns it's focusing on. The company completed a 30 million buyback program in FY24 and has retired more than 10% of its capital to date, with an additional 50 million buyback in progress, of which 10 million was announced in March. IP Group's management declared upon releasing the FY24 results that it is raising the proportion of realization proceeds used for share repurchases from 20% to 50% in 2025. I believe it is also important that IP Group nurtures its remaining portfolio to create the next wave of winners, and the company mentioned some promising next winners during the results presentation, such as Intrinsic Semiconductor Technologies, Oxy Health, and Genomics.
Perfect. Is there anything else worth noting?
Yes, IP Group aims to expand its ecosystem by growing its third-party capital under management. At the end of last year, it managed close to £700 million of third-party capital, including most notably Parkwalk, so IP Group's EIS fund management subsidiary, investing at the pre-seed, seed, and Series A stages, and the IP Group Host Plus Innovation Fund. Overall, the company generated £5.5 million of income in FY24 from fund management fees and licensing and patent income. Management highlighted that it had hoped that the proposals of the Mansion House Compact, which is a voluntary commitment by some of the UK's largest pension firms to allocate at least 5% of defined contribution funds to unlisted equities by 2030, would be implemented sooner. These were held up by some ongoing regulatory changes, example around fee caps, but IP Group expects better traction in the second half of this year. And its ambition is to reach $1 billion of total third-party AUM in the near term. It aims to set up a UK scale-up fund focused on Series B and beyond, which would support companies, possibly also IP Group's holdings, at a later growth scaling stage, much like Host Plus.
I see. So, thank you very much for this detailed and insightful conversation on this investment company, which I can see provides a unique exposure to really impactful technology businesses. You've been listening to Uncovering Trusts, a podcast by the Edison Group. If you want to find out more about IP Group and other investment companies that we cover, please visit www.edisongroup.com. Thank you.